All righty then. So Wednesday, September 27th at 7:23, little earlier, even still. Um, Basically my whole point of the day, or at least the point of the morning, right off the bat, is I've never missed. I don't think I've ever missed so much. I have missed other trades, but I've missed so many trades yesterday. It just was unbelievable. It literally seemed like every time I put an order in, it didn't get filled. I was like 3 ticks away. It was nuts. It was nuts. I mean, the good thing is I didn't lose any money, but I lost money obviously in my other accounts where everybody lost money yesterday because the market got whacked yesterday pretty hard. And it was a pretty good sell-off yesterday in that they seem to hit a lot of the stuff finally, and it's kind of like settling in now that a lot of the big tech stuff is starting to kind of soften up pretty hard, which is okay, it's fine. I mean, it is what it is. I mean, we had a nice run there for a while. I don't think we're getting in the danger zone yet because VIX is still under 20. And as long as the VIX is still under 20, at least in my humble opinion, I think, we continue this chop. I don't really. And if we see the VIX begin to dissipate and maybe come back down, then maybe it would be time to get bullish. So I'm really watching that more than anything else, the VIX, the VIX. This is the VIX futures. But that's kind of what I'm watching from a trader's point of view in what I should be doing even in my bigger global accounts. Because up until this point, I have been lightly positioning myself with some hedges. I got a few collars here and there. Anyone not familiar with a collar? A collar with stock is when you do a covered call. So you sell a call against some of your stock, but you also buy a slightly out of the money put. And so what you're doing is selling the call against your stock, you're financing to purchase that put. And they do this, and large funds do this, mutual funds, whatnot, investment accounts, whatnot, and they do this as a hedge, and it is a very lucrative hedge when it works out. When it doesn't, a lot of times it may turn out to be moot. Because look, none of us can time the market of when it's going to implode. And when I do normally do these, it is around this time of year. Because let's face it, this is around the time of year usually when shit blows up. Historically does. So, but I'm not as heavily positioned as I would have thought I would be from where we've came. So with that being said, I'm actually reevaluating whether or not I should actually add on to my collars, or you can see yesterday I got blown up, beat up pretty bad in my accounts. Drew me down too. I was up almost $8,000 like by last week. So I lost almost $4,000 in a week in this account. Yes. Yeah, it happens. Yeah, everything's not a happy place. So that's kind of what I'm looking at. And again, I don't know if I'm really in that place yet. I think if the VIX goes up over 20, it's really going to present itself for a great opportunity to start selling premium again. Not to say that selling premium right now, and I'm going to shift gears. I'm not really going to talk about futures because realistically, all the levels are still in place. You can see here on the ES, they're all in place from yesterday, so I'm not really going to go over them again. And all these levels today, in my humble opinion, on the ES, if you have the pivots up on your charts, they're all playable right now, especially today. They're very playable. All of these levels, R1, R2, R3, S1, S2, and S3. And so there's really nothing more I can say about that. And that's really it. And the reason they're all playable is because we have, or starting to establish, a pretty decent trading range in here where I believe all of these are actually going to be in play. So that's it. That's it. No big time analysis. So anyway, let's talk about volatility, because I think volatility is actually important right now. Because let's face it, there ain't nothing else going on unless you're like being contrarian like me and getting your arse kicked in bonds. I did get a little longer in bonds yesterday, and nice pop. It's had a couple of nice pops, nice run yesterday, but they ran the sucker right back down again on news. But I think this is going to be something you continue to see with bonds over the next few weeks here. I think you're going to see this very, very, very choppy action, and I think your fortitude's going to get tested if you're long. And there's no doubt about it. It's going to get tested. And this is kind of where you see where your mettle is. And this is where it comes to being small, right? Like, as long as your positions aren't going to blow your account. Like, I think my bond position is not just barely like 1 or 2% of my account. So, it's like, as much as it like pains me, it's not going to put me out. And as long as that's the case, who cares? Right? It's all about trading. It is all about trading. So anyway, there you have it on bonds. And then I want to flip into volatility. As you see, VIX is at 18. And what I'm going to do here is I'm actually going to bring up the liquidity. Now, this is probably one of the best stock lists that I've actually ever seen as far as stocks to trade, and not just trade for stocks, but liquidity even for options. Because it is really important if you're going to trade options, and what I never seem to see enough emphasis on it at all, is if you're going to trade options, you need to make sure there is high volume and high liquidity in the options in the stocks that you're trading, because you could trade a stock. I showed you AutoZone just the couple days ago. You look at AutoZone, and you would think a stock that's as high a priced as that the options would have an enormous amount of interest because the stock is high. Not the case. Very illiquid stock. And up until the splits, Google and Amazon were that way. They're not so much anymore because the splits actually made them very tradable and made the options very liquid. So it's important to look at liquidity, and I use this list because this high option volume list gives you it's ETFs and stocks that have extremely high volume. And not only just stock volume, but option volume. And then rank them by IV rank. And now what the IV rank is, and there's a lot of misconceptions on what it actually is. It's actually the running 30-day level of volatility in that underlying is what, at least that's how it was explained to me, is that it's the 30-day. So it's basically like your 30-day volatility rank of that underlying. Because as you can see, if you look at the IV rank, and we'll just take something everyone knows, for example, Nike, who's got earnings coming up, and we're probably going to be doing a trade in there, similar to Costco. You have the implied volatility on the options, and I always have the monthly. If you notice, I always have monthlies up. I don't trade weeklies. The only time I trade weeklies is if I'm doing something off the cuff, or I got some kind of special one-day thing, or maybe a couple of days I'm doing. That's it. I don't even look at the weeklies. I think they're horrible. Honestly, I think they're just terrible, because a lot of them turn out to be not so much in the underlying, but if you do like the weeklies on the SPY or the Q, or the dailies and the weeklies on the SPYs and the Qs, and those are pretty liquid. I mean, But for the most part, when you get into stocks, a lot of the stocks weeklies they're just garbage. You don't really have any big institutions. You have no real big open interest. I mean, you may have some underliers that have some open interest, but anyway, I just don't mess around with them. But we'll just look at Nike, and you have what's the implied volatility over here, this is the implied volatility for the month of October, is not the same. And if you go down the list, right, you can see it's different every single month. And then the IV rank is 56.5. And that IV rank is the 1 month or 30-day cycle of that IV rank. And what I've noticed just in the last few days, and we put up this list, if you ever even go back, I wouldn't encourage anybody to go look at some of my previous videos, because I know sometimes I can be a bore, depending on what kind of mood I'm in. But the stocks is a change in this list is what is amazing, because just a couple of weeks ago when volatility was sitting at 14 and 13, and I think it even got down to 12, this list had nothing but garbage in it. And what I mean by garbage, had all the same garbage like Canopy and Tilray and all the weed stocks and a couple of airlines, because there's always some airlines and garbage. But now you look at this list, and there's some big uns in here. There's some big-time stocks in here. Walgreens, Dollar General, ChargePoint. I mean, that's not a big one, but I would say it's a big one as far as name recognition. Telephone, I call it telephone. AT&T, Nike, I just had that one up there. Southwest, bing, right? Southwest Airlines, J&J, Verizon, Microsoft, Google, right? All these bigger names are starting to creep up into this high volatility list, which I think is great because it presents a ton of opportunity. UPS. And the volatility is actually good. Comparatively. Now, just a couple of weeks ago, if we were to look at, now let's just look at volatility. Let's just take Google, for example, and let's put it on the chart. Oh, God. You kidding me? Oh, brother. And you look at volatility. This is the volatility, and look how it's grown. You can't see anything because this won't move. Where is it? All right, that's nice. There's nothing there. It's there, but it's not showing up because look, what the hell happened? All right, let me. Is everything like this, or is it just Google? But here's Microsoft, probably better. You could see how volatility has grown just in the last 3 weeks. Right, we were down, low 30s, and I think we were even in the 20s, and now we're up near 50. So volatility is not only growing in the overall markets and in the indices, but it's also now beginning to filter in through the underlyings as well, all across the board. And they're the bigger names. They're not the garbage anymore. So that is actually a good sign for us as traders as we start to look into some of these stocks with high volatility to look to sell some premium, because that's when we want to sell, right? We want to sell premium when we see, again, it's in a historical thing, right? If J&J, and I just know from following the stock, historically it runs at around 15 IV rank, because it's just not one of those stocks that has that tumultuous cycle where you'll see the volatility completely swing from one direction to another, where now you got a stock like J&J that's usually in the teens is now up over 50, which is incredible. Now, I know they've had a lot of things in the news cycle and whatnot, but that doesn't account for everything. And then if we look at J&J, they do have earnings coming up. This is a stock, I believe, that's kind of setting up. And look, if you notice, I don't really give a shit about the chart. When I'm selling volatility, the only thing I'm going to be looking at a chart for, and so I'll just put J&J up here Just so you can see a bunch of our alerts went off. And they were all good trades if you can get them. But again, isn't that half the battle? You know, I don't care about alert service. That's why I tell people to be careful about alert services. Because the problem with alert services is that, all right, it looks good. And I can go back and show you all the alerts. Look, here's all the alerts that went off and how they all set up. And when they were reversal trades, because that's basically what I do, they all triggered and the underlying, which is the future in this case, all went the other way. And if you looked at it on the chart, it looks amazing. Like, oh, I picked it perfect. Getting executed and getting in that trade is a whole different thing, folks. And so just realize that. Because now, by the time the alert goes off, and I don't get on a tangent, but by the time the alert goes off, you get it on your phone or whatever trading you're right, or you're sitting here like I was, and that alert goes off, unless you have that order in on that at that price with some specific stop, because you don't know if it's going to go through there and drop 20 ticks or 25 ticks and then reverse. You have no idea. But when you look on a chart and you look at it an hour after it happened, right, it looks perfect because, you know, oh, wow, I could have got in here, right, blah, blah, blah. It's what everybody does out there in La La Land. It's getting executed and getting in the trade is even a harder battle. So just be careful of the alert services because they are full of shit. They are full of shit because, you know, you don't know if they actually even got executed at that price or not, or they even got in the trade. And like I'm telling you, yesterday, I couldn't get in any of those trades. I actually put the orders in, no doubt about it. I did not get in any of them. And if I was selling something, I could have made a fucking great video about how I went and I killed it, and I could have showed you on the chart, and I could have used a sim account. Trust me, I know how to do it. I know how to make everything look like I did everything. And trust me, folks, these people are just nothing but, they are slime, right? There's nobody killing it like that. Because if they were, they wouldn't need to tell you about it. All right, so let's talk about J&J, get off that subject. But here we have J&J. And the only thing I'd be looking at a chart on for J&J is where my strikes should be. And I'm going to look for support and resistance. Right? Where's a good spot for support? Where's a good spot for some resistance? And from what I see here, I see some pretty good resistance at around 165. I see some pretty good support even down here at around 150. So that's where I'm going to look at my strikes. So I'm going to look at stuff over 160 and below 150, 145. Like the 150 looks perfect. Now, I'm probably not going to do this trade because it got earnings coming up in a couple of weeks, but that's something I would do. Now, I don't want to use $3,000 worth of buying power. What I might want to do here is I might want to get a little directional in here because, you know, this stock has gotten a bit, you know, let's face it, it's gotten a bit blasted along with everything else. I mean, look at this. You start drilling out. This is not really a very bullish chart. And if you want to get wonky, and when you get wonky with your charts, when you're trading this style, folks, and I keep repeating it, you're not doing this to make your charts look good or make you kind of convince yourself. What you're trying to do is you're trying to find areas where there may be a reversal so you know where to put your strikes. So you know where to sell. So if I'm selling puts, it's probably a safe bet that 150, selling a 150 put has a pretty high probability. If I'm selling a 165 call, I got a pretty good probability that it's going to be out of the money. That's it. That's all you're looking at the charts for. You're not looking at for patterns. You're not looking for any of that shit. That's all you're looking for. You're looking for spots that you could pick as strikes. So in this case, I actually like selling the 150 put. It's trending down. It's getting beat up. The market's weak. Volatility is kind of increasing. You know, is it the perfect time to do it? Probably not. Probably not, with volatility kind of increasing a little bit. I mean, it probably, but when is the optimal time? There never really is. But you can see here, just selling the put is an 82% probability of profit. All right, so I'm just using that. I'm not doing this trade. I'm just explaining, because I'm getting a lot of questions. People are saying, like, how do you take your charts and then turn them into trades? That's how you do it. That's how I do it. And I do the same thing if I went the other way. If I was buying options, I'd like to be a little in the money. And I also, always want to be thinking, like, where am I going to get out? And then this line would be probably someplace, or down here would be somewhere where I'd be looking for my break even to be around 155 or 150 if I went and bought options. So that's kind of how it works. And it's not rocket science. And don't overcomplicate it. Just get yourself to where you can see stuff like this without even, like, I could see this already without even drawing it. And I'm just doing it because I'm demonstrating. But you just get your eyes trained on the charts to see things like this. I mean, I'm already seeing that. I don't even need the lines there. And then these will give you, and then these lines and these high volume nodes will give you areas where you can pick your strikes. Real simple stuff. That is about it. Let's look at, we talked about the ES. I'm going to go into crude oil here. A lot of alerts on crude oil as we are up over 91. My alert went off last night, so it doesn't do me a shit. Doesn't do me direct right now. Next spot we got marked is 92.27. So real close to a trade here at 92.27. And that was marked way back, I don't even know, back on the 22nd. So last week we marked that one up. And that's why, it's important to use alerts. It's important to use alerts and make notes because when this comes, and now not only did we mark this last week, it's also an R3. So that's a really strong level. Now, does crude reverse up there? I don't know. It's been slicing through shit like nothing exists. But you can see here, it hasn't been just one big happy run all the way up. I mean, you look at every one of these hourly candles on the way up, every one has a pullback in it. And these trades are not like, I'm not going to be looking for the three handle move, right? The $3 move here. I'm going to be looking for some ticks is all. So that one's setting up. And then outside of that, I don't have anything. Because crude looks like it's ready to just bust out and go nuts. All right. And then soybeans had one hell of a reversal yesterday. And this is the trade that I'm most upset about was this yesterday. Here we came down and then I completely missed it. I totally missed it. I sat there and watched it. I couldn't get filled, and it pissed me off because it would have been the trade of the day. But anyway, what are you going to do? It is what it is. I really don't have much on soybeans. I do have a level marked here at 13.15.25. And we're getting close to that. I will short that. 13.15.25. All right. And so quick today. So 23 minutes. I don't really have much of anything else. There are some earnings. We did do the Costco trade. We did the Iron Condor. It's kind of doing what it was supposed to do. Costco only went down $10, which was perfect. This was the trade. It should come in. IV rank should actually get collapse a little bit today, and then this should come in nice. And I was able to sell. I think I sold it for 115. I didn't get 120, but it should come in pretty nice. I'll probably just dump that today. Let's go into earnings real quick. I think today is Micron, and I didn't do anything. Micron is after the bell. Yes. Micron's after the bell today. Let's take a look at 40 IV rank. I think I'm going to do something in Micron. It's normally a mover. There's decent volatility in here, but it's not anything to shake a stick at, in my opinion. But nonetheless, let's take a look. Expected move of $6. We'll call it 7. It's going to be real hard to do a 1 standard deviation in this and get any juice. So in my opinion, in order to get any juice in this trade, you're going to need to go inside the 1 standard deviation and, be outside the expected move, but stay inside the standard D. You can see there's tons of liquidity out here in November, tons. I'm not even looking at October, too short term. Lots of liquidity, right? Look at the up and down here. I mean, you can't beat this liquidity. Tons of open interest. Love to see that. And now the 60.7750 looks to me like the trade to do with Micron for earnings. And you can try and do this one for about $2.15. You can see it's about a 70% pop. You're not using much buying power, so margins are good in here. Margins are good, and you're bringing in $2.15. Not a very good theta number because we're out in November, but understood. And you are skewed a little delta negative, which isn't bad in tech right now. I think that's actually probably not that bad. All right, and so that would be the trade to do for Micron. And I'm actually going to go ahead and I'm going to actually mark this one up and post it. All right, and so that's it. That's all there is for earnings. Micron, strangle. Not going to do an iron condor. There's just not enough juice in here to do it. Again, you know the drill. If you need to do an iron condor and you don't have the capital, just cover this. Just remember there's $2.50 wide strikes here, and as well as 5. So if you do a 2.5 wide, you're going to use a little less margin. You're going to get a little less money, a lot less money, but you're not going to use as much margin. So in this case, if you would turn this into an iron condor, that's what it would look like. Not a bad trade for someone with a small account, quite candidly. You're only using $174 worth of buying power. You're bringing in $76, and you still got over a 60% chance of making money. And you're almost delta neutral on this trade. No theta, but that's what iron condor is by design. It doesn't have much. They don't have much theta. So there you have it, Micron. And that's going to be a wrap, right? 27 minutes. Wow. I wish I had more, but I don't want to ramble. I'm in a rambling mood, so I don't want to ramble. And we're going to see if we can try and catch this crude here today. Now, I'd like to continue broadcasting, and this isn't a cop-out, but when I fire up my platform while I'm broadcasting, it literally brings everything to a halt. And I have a pretty powerful machine. It's just not powerful enough to run, because I run my platform on Windows and it's a VM. So I got Windows running, I got this, I got all my other platforms running. And when I fire up Windows, it pretty much blows this whole OBS thing that I got going on here. So it is what it is. I mean, there's no other way around it unless I go buy some behemoth machine. And I don't want to buy some behemoth machine because I don't fucking care. So anyway, I'm going to be watching this level here at 92. I'm definitely going to take that short. I'm going to go small. Just going to do one contract, see what happens. So good luck today, and hopefully I'll be back tomorrow.